Good morning and welcome everyone to Opening Bell. I'm your host Nickey Mirchandani and I'm here to take you through the news and cues that could impact a trading day. Of course, Indian shares have got on to a cautious start amidst mixed global cues. Gifty Nifty trades higher by 8 points, signals in a muted start coming in for Dalal Street. Wall Street stocks climbed early Monday and of course they ended higher previous nights, extending the upturn at the start of the holiday shortened week. Microsoft shares rose after it hired in ouster OpenAI co-founder Sam Altman. That's a bit of development there. But overall, if you talk about Asian markets, they show in mixed signals despite Wall Street gains. Talk about FII data, they've sold shares around 645 odd crore and DIIs have bought equities to an extent of 77 odd crore. In terms of the FNOQs that we have, FIIs have been the net buyers in index futures. In fact, they've just been the buyers in the futures segment and they've been sellers overall in the option segment. If you talk about the index options, FIIs have been the net sellers to an extent of 17,464 crore. They've also been the net sellers in the bank Nifty options put together. If you talk about the FNO ban, what is new in the ban is BHEL, Indiabulls Housing Finance and NMDC. What still remains in the ban is RBL Bank, Z Limited, Delta Corp, Hindustan Copper, MCX, Chambal Fertilizer, Manappuram Finance and India Cements. If you talk about option Qs, well, Nifty PCR right now is a bit lower, suggesting that it's below that one level, suggesting that the sentiment right now is turning to be a bit bullish, given that traders are buying in more calls than puts. But let's discuss the trade setup and the strategies along the day, along with a few recommendations that we have from Ajit Mishra, who's the SVP Technical Research at Religare Broking, joining us early this morning. Morning there.
Good morning, Nickey.
All right, Ajit, your idea, your cues that you're picking up from the trade setup, of course, and the levels that one could watch out for, both for Nifty as well as Bank Nifty, and of course, few stock recommendation too.
So, Nickey, almost like 3 days, we have been seeing that index has been hovering in a band, a very narrow range when it comes to the Nifty index, despite the underperformance of the banking pack. So, it's a kind of like a time-wise correction that we are seeing in the market, which is very healthy, considering the kind of move that we had from the recent bottom. So, after roughly around 1,000-point kind of a rally from 18,800 to 19,800, we expect Nifty to spend at least a couple of sessions more in a range. And any dip towards 19,620, 600 area is basically the area where one can look for re-entering longs, with 500 being the stop and 19,850. And then in case if we manage to surpass this level, then maybe closer to 20,100 plus zone as a position target. So it's a buy and dip market when it comes to the index, Nifty and banking, but on the other hand is still showing sign of weakness. So any rebound towards 43,700, 43,800 area is the area where one can look for going short, in the banking index, with 44,000, 44,100 being the resistance area. So net we have diverse view when it comes to Nifty and the banking index. But when it comes to stock specific, across sectors, barring the banking and financials, we are seeing buying opportunity. So one should stay stock specific, and in fact the broader markets which are showing tremendous resilience. In fact, the mid cap index have made a new record high. The small cap is anyways trading at the record highs. So one should stay stock specific and look for the sectors which are showing resilience. So among the top 3 ideas that we have for the day, the first one on the list, we have Bharti Airtel. So this telecom stock has been a consistent performer, hardly sees any, excessive volatility even during the tough days. And finally, we have seen a fresh breakout after 1.5 months of consolidation. The stock is anyways trading at the record high. So we expect this positive tone to continue. And 1,015 is what we are eyeing in Bharti Airtel in the near future. So with stop at 938, one can go long in Bharti Airtel. The second stock that we have on the list is Balrampur Chini. So sugar stocks, we are seeing on and off kind of participation. And Balrampur Chini, after nearly a week-long consolidation, has witnessed fresh breakout in the last trading session. So we expect this momentum to extend further. And 456 is what we are eyeing as an immediate target. So we'll stop at 440. One can go long in
I'm
Balrampur
just
Chini.
going to interrupt you here for a bit and address the market open and then come back to you again, of course, and talk about Balrampur Chini and other few stock recommendations that we might have. But just open there, marking, well, it's a good start coming in for the markets. We were actually anticipating a cautious start, or let's just say a flattish start coming in, because the cues were pretty much mixed, given Gift Nifty was indicating a flat start and Asian shares also had turned mixed. But of course, the US shares ended quite well last night, and Nifty at this point of time is doing well in trade, and we're seeing gains to an extent of 0.4% for Nifty. Beg your pardon, 0.3% for Nifty, and it's trading around that 19,750 level thereabouts. So it is a good start. Remains to be seen if we witness some amount of consolidation through the course of the day. But Bank Nifty also is doing well. It ended also a little bit, both of these indices ended a bit of, on a flat note on the previous session. But in today's session, there seems to be a bit of uptick there coming in for Nifty as well as Bank Nifty, and mid-cap index also is doing well in trade today. A bit of outperformance rather coming in for the small cap and the mid-cap index, outperforming by a margin out there. So, the broader indices continue to outperform there. But let's also talk about Nifty PSU Bank along with Nifty IT Index to see how is the trend shaping up for these two sectoral indices. Well, we are looking at gains coming in for the Nifty PSU Banking Index too. Gains to an extent of 0.5%. And if you talk about the Nifty IT Index, well, it is holding up in green with gains to an extent of 0.5% out there. In terms of what we have for other sectoral indices, let's look at the charts that we have. Nifty Pharma seems to be doing well, 0.25% of gains coming in for Nifty Pharma. Nifty Metal also is witnessing some amount of traction there, 0.1%, almost 1% gain coming in for the metal index. FMCG is pretty much also sliding. Actually, it's a flat start coming in with a bit of negative bias for this one, and auto seems to be in top gear. Let's move on to the top gainers and the top losers that we have, just to mark the open there and see where the trend is exactly shaping up, and the sectors, or let's just say the stocks which are doing well. It is a good start indeed. Nifty about 19,750 mark, and Sensex up 200 points. Hindalco, Adani Enterprises and Tata Steel, these are some of the top gainers that we have. Apart from that, we have JSW Steel, HDFC Bank and Reliance. Essentially, that's where the support is coming in for the markets. It's HDFC Bank and Reliance, the heavyweights, which are lifting the market right now. Nifty at least higher. And also Bank Nifty seems to be doing well too. Along with that, let's also address in the top losers. The market price right now is widely in the favor of advances, 40 advances versus 10 declines. That's the Coal India, ONGC and Tata Consumer Products. These are some of the top losers that we have. Apart from that, Cipla, Divi's Lab and Asian Paints. These are other top losers that we have. But let's go back and check with Ajit, what does he make out of this open right now? A start which seems to be about that 19,750 mark. How does he read on to this, and what can be expected going forward? Does he expect some amount of consolidation?
So yes, Nickey, the opening is largely on the expected lines. Basically, Nifty is something that we were eyeing. This zone close around 19,620 to 630 area being the support. So yesterday we tested mark and we are seeing a rebound. But upside, we still feel that this zone 19,800, 850 will continue to act as a resistance at least from the next couple of days. So it's going to be broadly this range bound session continuing with 19,550, 500 being the lower band and 800, 850 being the upper band. So until we see the conversion between the two indices, both Nifty and the banking index, I doubt that there will be any significant up move. The other sectors are basically playing supporting role, when the banking is not participating. So though today we are seeing that uptick in the banking also, but it should sustain, and the banking index should surpass this hurdle of 44,000 level decisively and hold. Then we expect this alignment between both the indices through, and the best part is that the global markets are basically showing conducive trend. So as long as we are seeing all these factors inching in similar lines, so maintaining a buy on this approach is something that is still prudent.
All right, let's quickly address in stocks and news Aishwarya, I'm going to come back to, Ajit, I'm going to come back to you in just a bit. But let's address in the stocks and news first. Tech Mahindra, which is formed in a joint venture with Neom Tech and digital company Autonomous. The JV is to provide product and platform development services, metaverse services and solution intellectual property. This is to Autonomous, other Neom group companies, which is essentially Neom is a Saudi Arabian development company. So Tech Mahindra is right now, along with a bunch of IT names, actually doing well. In fact, Bernstein has come in with a report on IT sector where it speaks about the sector focus now being shifted away from FY24 towards growth outlook in FY25. So clearly FY24 has now been written off, and the brokerage believes on stabilization of US macros, bottoming of cloud revenue upcycle in FY25 and strong order book, which is almost up by 48% sequentially, and a leaky bucket remains, which is BFSI and telecom companies. It also talks about sector being better positioned for a growth recovery in FY25 and sees margins improving and a double-digit EPS growth. It's also talk about valuations which are largely stable and remain in line with 5-year average. It basically remains positive on select large cap names like Infosys and TCS put together. I would also want to talk about RateGain. Of course, that's the one where the company has closed in a 600 crore QIP at a price of around 643 rupees per share. RateGain is the stock that I'm talking about. The RateGain, it's, the company is going to be utilizing or will be utilizing the funds for strategic investment, acquisition and inorganic growth. We can move on from Tech Mahindra to RateGain. Some of the notable investors in the QIP include ICICI Prudential Mutual Fund, which actually have invested in Sundaram Mutual Fund and Societal General. That's some of the names that essentially have entered into the stock with the QIP. So that's a big development there. But let's go back to Ajit and check with him. What does he make out of something like IT names, which seem to be doing well in trade? Tech Mahindra is clearly one of them. Do you like anything else within the space?
So, Nickey, within the IT space, means if you have observed one trend that some of these mid-cap IT names like Persistent, Birlasoft, they've outperformed the overall sector, and now we are seeing broader participation. So, if you exclude a couple of names like Wipro, Emphasis, these are the names which you are not seeing any traction, but the rest of the counters are doing well. And when it talks about the large cap ID names, our preference is HCL Tech. So for the simple reason, because the stock is trading at the record highs when the entire sector was struggling, especially the large cap IT major, it was hovering in a very narrow band. And with marginal recovery in the index, the stock is already at the record high. So this clearly shows the kind of outperformance that we expect this stock to continue with. So 1300 is something that we are eyeing as the immediate support area. So in case if somebody is willing to initiate fresh long, they can go ahead with the HCL Tech for sure, with 1300 as a stop and 1400, 1420 as a target area.
Sure, Ajit. We're just going to leave it at that. And thank you so much for taking out the time and having a conversation with us this morning.
Thank you.
All right. Let's move on to the conversation to Aishvarya Dadheech, who's the founder and CIO of Fident Asset Management. Hope I've got that right. But Aishwarya, what do you make out of the current market situation? It's a bit of gains that we've seen. Of course, there is a sense of consolidation which is also prevailing. FIIs continue to be the sellers in the market. There is no respite coming in from that one. But how are you looking at it, especially by the end as we head towards the year end where the activity of FII usually is a bit slow? How are you looking at it?
Thank you so much for having me here, and good morning to all the viewers. Obviously, we had seen a very roller coaster year so far. You are aptly correct that we have seen that FI have been sellers so far. So if you look at, last calendar year, we saw almost close to more than $17 billion of outflows. And this year, we have been not able to recover that. So we have seen so far close to $12 billion of inflow in the equity market from the FIs. But what is heartening to see in the recent weeks is, possibly because of a very, I would say, a sanguine message from the Fed and the possible what we have seen on the yield curve moving from almost close to 5% to 4.4% yesterday, there has been some respite on FI selling. So if you just see the month of September and October, we have roughly seen $5 billion of outflows. But November so far, it's more or less flattish. I think there will be a negative number of not more than $150 million. So it's a clear sign that there's a risk on sentiment globally, which is creeping in, and it bodes very well for emerging markets. If you look at markets like Taiwan, we look at South Korea, they've got good share of inflows into the market recently. India has not been a big beneficiary of that, in spite of a very good quarterly results that we have witnessed. One of the reasons which comes to my mind is, the surprise believe that possibly there's a state election which will set the pretext for the national election, which is due next year. Possibly there will be some volatility that might come in the short term because of that, and they might be more watchful about this. But I think apart from that, this clear risk on sentiment should all rub up on Indian market. One more important point, if you look at it in very, very short term, say 1 month data for major markets across the globe, see, your Nasdaq is almost a 22-month high. I think in the last 1 month, Nasdaq is to sell up 10% or so. Your other leading markets in US, whether it is S&P and Dow, are up almost 7-8%. European markets are up 7% in the last 1 month. Even if you look at China, which has been a drag, is up 4%. Taiwan, Korea is up 4 to 6%. Indian market is flat last 1 month, in spite of a good quarter. So it's more because of possibly there's some element of advice who believe India is still expensive compared to other emerging markets. But I personally believe that this state election possibly is, holding them back to turn things around. And as you rightly said, we are just close to this year, and with December is normally a very late month. So we don't expect very high flurry pulling out in this month, but possibly we see the end of aggressive FI selling from here onwards.
Sure. I would also want to chat with you about the bunch of IPOs which actually are going to open, and one of it has already opened in today, that is IREDA. That's the one probably that's opened in today. Tata Technologies is another one. Flair Writing Instruments is also going to be opening in for subscription tomorrow. Your view, what are you looking at? Of course, between all of them, I'm sure you will have a view for Tata Technologies, but what about the other ones?
So it's a right time for the IPOs. This calendar year, we have seen a flurry of IPO, and a lot of wealth has been created from that perspective. On the coming now, so obviously Tata is a unique, because one of the rare IPOs from the Tata is coming after many years, which is creating all the frenzy about this business. But if you look at for the other businesses which are coming, especially say IDA and Flares and things like that, a majority of them have got a good, I would say, interest in the retail segment. And most likely these IPOs are expected to sell through very easily. Obviously there is some very strong knack about each of these businesses, specifically to say, we spoke about IDI, then this is one of the lowest, cost of, I would say the top 3 lowest banking, that finance company which has a lower cost of funds, which possibly have the possibility to create higher ROEs in the coming time if this momentum of investment keep going through. So these are all beautiful stories, which investors can look at. I would not advise investors to come into this IPO for short-term use. I would be more interested to buy into these names with a longer term horizon, where these businesses have competitive advantages, where they can sustain their ROEs. And obviously we know that IPO valuations are a bit always stretched. And for any investors to make any meaningful wealth out of them, you have to be stick them with for longer. And it's only workable when you invest into high quality businesses with competitive advantages, rather than just throwing money here and there.
Sure. The last question that I have is, perhaps, do you see a narrowing of gap between Tata Technologies and KPIT? Clearly, it's been, the revenue growth targets and the valuations at least seem to be right now, in the favor of KPIT, which seems to be enjoying in valuations given the kind of revenue growth and the margins it has enjoyed thus far, as compared to some of the other mid-cap names, and also Tata Technologies over the last 3 years. What do you make out of it?
It's a very good question, I would say. It's a very tricky one. See, these are the 2 businesses in this segment which are into auto parts and aerospace, and doing ERD into all the space. But, the kind of the pedigree Tata enjoys, makes a very compelling case for them to have lofty valuations too, because of the consistency of the numbers over the last 3 years. And as I said, the great management and the great legacy that they carries with them. But looking at the valuations of KPIT, you can all make it out from the way I'm speaking around. But the valuations of KPIT are, I would say, very, very stretched. And putting an analogy to that related to Tata's, I would say it's like a fourth story being incubated rather than anything substantial. So if you ask me, can it happen? I won't deny that, but I would be watchful of it if it happens. Obviously they should get at least, if not full valuations, at least 60-70% of what KPI it is trading at, or it. And even if that happens, I think investors can get a lot of wealth. But one has to be watchful of how valuations will pan out for both of discounted. Because see, ERD as a business specifically doesn't have that kind of consistent ROE accretion capabilities compared to what a core IT businesses have. So one has to be watchful about that thing. And we really are happy to see the consistency these companies are progressing well. But stretch valuation is always an issue to us.
Sure. We're just going to leave it at that. And thank you so much for taking out the time and having a conversation with us this morning.
Thank you. Thank you so much for having me. Thanks.
All right. Let's also talk about IREDA IPO, a book build issue of around 2,150 crore IPO, essentially, which hits the primary market today. And it's a combination of both fresh as well as OFS. Fresh to an extent of 1,290 crore and OFS, which is to an extent of around 860 crore. Now, the allotment is expected to be finalized by November 29th for this one, and the shares are expected to be listed in by December 4th. Price band has been set to a range of 30 to 32 per share, and the minimum lot size for application is 460 per shares. But we're just going to leave it at that. With this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us at the comment section below. Follow us on the link at the bottom of your screen, and for rest of the updates, stay tuned into moneycontrol.com and Money Control app.